What's up, Kabroda crew? Welcome in. Thanks for joining our live stream. We're back at it again today to check out the markets, kind of see what's going on, see what we got happening here. Yeah, kind of going into this Tuesday, coming out of the weekend. Had a little bit of run up, over the weekend. Kind of run it all the way up to around that 64,175. Right here, actually, at our, I guess our daily. Well, this is yesterday's levels, but this would be our daily resistance yesterday at 64,251. So pretty decent little run up over the weekend, after kind of running down all of last week, kind of coming into that Saturday range, mostly sideways throughout the weekend until we ran up on Sunday. Yesterday, we kind of ran more or less sideways again. The system was calling a stand down, a lot of sideways price actions. That's kind of what we saw. And then coming into today, we actually ran down a little bit. So we're sitting around 62,400 level. So, down a little bit, but not too crazy. We're excited to kind of jump in, see what's going on. We've seen a lot of people calling it that 60,000 range the bottom. People are saying we got the bottom there, the bottom's in. We're looking to come up, but we just aren't sure. That could be the bottom. Definitely, like I said, it could be the bottom. But with what we're seeing on the charts, it's definitely looking very plausible that we'll come down all the way to that 40,000, 45, 44, well, 40, we'll just say 45,000 at level, around there. With the targets kind of calling it down there. We were talking about, maybe that 50,000 range will be more likely, but who knows? The full-on system is saying that 45,000, so we'll just have to kind of see how the days go and see how it kind of plays out. That would be the level we're going to call if it's going to break down. But people could be right. That 60,000 level could be the bottom there, depending on kind of what happens next. You got to let price action kind of play out to confirm that was in fact the bottom. For right now, that it looks like the bottom right now, but it doesn't mean that it necessarily is going to be the bottom. And a lot of other traders are going to have all of these things that they're going to point out, but until price action actually comes up and clears, some of the higher levels, we're not going to call that the bottom yet. So we'll kind of check that out a little bit more later. I believe our breakdown will probably have some stuff kind of on that. Not exactly on why people are calling it and why we shouldn't have it, but kind of just talking about the different levels and what we're still looking for. So, we'll get into that here in a little bit, kind of check that out. But for right now, we'll just we'll go ahead and get our levels and kind of get everything set up and see what the chart's looking like today, and just see where we're kind of at today. So yeah, let's go grab our Kabroda levels for today. So we'll head on over to our website here. This is Kabroda.com. If you've never seen it before, it is not available to the public as of right now. We're working on bringing out a new, we're not sure what we're going to call it yet, but a publication of sorts that will have basically just a breakdown of the market. You'll have, the levels for the day. You'll have just kind of it talking about what the market is doing. Are we looking like we're going to possibly, be more sideways action today? Are we looking more downwards action? What's kind of the general feel? Kind of just giving you overall, not financial advice, but just educational content kind of on the whole of the market for the day. So, talking about longer term time frames, like where's price action going? What are we looking at? What's going on with the longer terms? And then kind of taking that and then say, okay, well, today what's kind of going on? What are we looking at? What are important levels for the day? That kind of thing. So, and it'll be mostly like kind of what I'm going to show you today, being the daily brief, but it'll be a little bit better written, a little more easy to read. So we'll kind of check that out here later probably, but for right now, yeah, like I said, we'll jump in and grab our levels and stuff like that. So today we are in a bearish settlement. We got a 4 out of 5 on the bearish. That's just one of our indicators. So, you know, basically all you have to really get from that is that we are bearish. We're kind of building structure here, and then the jewel is in effect. So the bearish call that it's making, it's saying the jewel is in alignment with that, so that's good for us. We got a breakout level at 63,555 and a breakdown level at 62,444, and we'll go ahead and throw those on the chart and see what they look like. So I'm going to grab our levels here and head back to our chart, and we'll throw it into our indicator here. Yeah. So these are the levels for today. So you can see, looking definitely like a breakdown today. You got the nice 30-minute range here on the bottom. You got our breakdown level right here. Hard to see because there's actually a couple different levels kind of lined up right there, but we got our breakdown there. We got our daily support right there, and then we got our 30-minute range kind of landed right on top of there as well. So decent amount of levels right there. And then above here, we got our breakout level and our daily resistance right there as well. So definitely looking good for the breakdown. When you see the 30-minute range closer to one of the triggers, typically you'll see a breakout of that side. That's, you know, typically, not always, but most of the time you'll see that. So we definitely have that today. It's definitely looking like it's going to play out today. Obviously that's not perfect. It's not an end all be all, but that's definitely a good indicator for, you know, the bearish breakdown today. So yeah, we'll check out the brief, see what it says about today. But overall, you know, just looking at the basics of the system, it is looking pretty good for the breakout. But we'll see what the brief says for today. So if we open up our cockpit here, we got our daily brief all right here. So like I said, you know, this is going to be a little more, I guess, kind of behind the scenes look at it. So, you know, the writing's not going to be like super friendly, I would say, to somebody who's just kind of reading it, kind of looking at it. But it is going to be very information packed. Because you're kind of just, this is kind of just the thought that goes into, you know, getting this kind of set up here, and kind of the thought that goes behind what's today. It's not like raw data, but it is more of, yeah, more raw than, you know, kind of like thought through and cooked and kind of like ready to go out, you know. So yeah, we'll jump into it here. So for today's analysis, the bear wave 4 bounce remains alive, but has recovered only 13.7% of its structural range from that 60,055 wave 3 low towards that 80,632.72 ceiling. This bounce is not a bull market; it is a counter wave inside a bear sequence. So if you don't know, we've been in bear wave 4. What's bear wave 4, you might ask? Well, that is essentially an Elliott wave thing. So if you don't know what Elliott wave is, you can go ahead and look it up here after the live stream. But basically, the Elliott wave is a TA thing, essentially. So we'll grab it here. I'll show it to y'all. Yeah, so essentially, Elliott wave, the basics of it is you start with the top of the market, and then you go down. And that's kind of your first wave, wherever you see the low happen, and then you'll make a higher high, and then after that higher high, once price action clears the previous low, then that's how you know for sure that is a higher high. And then, so I guess the basics of just, you know, looking at the trends. So you have your higher high here from the previous trend, and then we made a lower low. So we broke this low. That's why it's a lower low. And then we come up and we make a higher high, but that's technically not a higher high until you see this next part, which is the lower low. So now, we've confirmed that. So now we're on wave 3, and there's 5 waves within the Elliott wave system. So you have 1, 2, 3, and then 4 came up here. and 4 was kind of, you know, up in the air until we got down below right here on the previous structure. So not great really for in terms of, you know, how low is this, how much lower is it than previous price action, but it's a start, you know. So we are still technically in wave 4. Once we get that close below this level, then we will be in full on wave 5, and that's how we'll know. So that's why I said, you know, we're in wave 4 still. We got a little bit of a bounce up after we kind of came down and tried to get below that previous low on wave 3. But it's saying, you know, we're not done with the breakdown. So we broke up, but we're not done breaking down. So we still have, you know, a lot of room to break down. If we do break down, wave 5 is the target, is around that 45,000 like I was talking about. And you know, you might ask, well, how do you know that's the target? Basically what you do is you'll grab the top here, grab the bottom of wave 1, and then you'll drag it and place it onto wave 4, and that's about the target. So you know, it's a little higher right now. Technically, whenever you do this, you do want to use spot. So you know, the target's around 52,000, but like I said, you want to use spot, and you can't be 100% accurate. That's why I was saying, you know, around 45,000 up to like 50,000, because, you know, the range is there is a range, and you know, just because, you know, we think it's going to go to 45, we might only come down to 50 because everybody's looking for that 45, so we'll come down to 50 and then bounce. So we'll see what happens here. But like I said, if we follow the Elliott wave pattern, we should continue down and get down to around that 45,000, around 50,000 or so. Yeah, that's the basics there. That's what the daily brief is talking about, though. So we'll go back and see what else we can get out of that brief. So let's get our chart set back up first. Looks like we're coming back up a little bit here. All right, the maximum wall at that 60,025 has a heat score of 21.9.1. Heat score is in relation to our gravity wall indicator that we built. It's within our site, but essentially we have a heat map of sorts, and the scores are based off of, you know, how much pull does that level have, just to kind of put it in basic terms. So we're looking for that level is just has a really high pull, essentially, is what it's saying. So price action kind of wants to go to that. It's essentially what it's saying by saying it has a high heat score like that. And that sits directly below the gravitational drain, and a weekly close below that 60,055 low collapses the bounce and opens the bear wave 5 destination to at 42,000 to 45,000. Until price reclaims structure with the daily close above that 63,555, backed by coherent multi-timeframe energy, not the current one of 5 bullish votes, the remaining structural noise inside a bear counter wave. So yeah, we're essentially still in a bear wave. Like I said, you know, there's one, like we looked at earlier, you know, there's the bearish 4 out of 5. It's saying one of those is bullish now. So you're saying 1 out of 5 bullish, 4 out of 5 bearish. So overall, you know, we're still looking pretty bearish. We're going to need more going over to the bullish side if we're going to want to flip right here. Looks like we have a couple people joining in, so welcome in. Terry, welcome in. Kathleen, thanks for joining. All right, so today's energy for the 4-hour, the daily, and the weekly, they are all locked in bearish, while the 1-hour carries a lone counterwave bullish signal. It's not a trend, it's a skirmish. The hostile ceiling and chop risk classification running simultaneously is the most structural adverse combination in this framework. 50-minute is primed. Grade is a false comfort signal here, not a green light. So essentially, you know, everything is bearish. 1 hour is looking bullish. So kind of smaller time frames are kind of flipping, which is, you know, what you want to see when you see that flip. But as of right now, not looking too promising for that 1 hour to actually continue with that. Why the system is standing down today, we have condition 1 fires directly, so the harmonic state is hostile with has a hostile ceiling, and the cinematic field is chop risk, with the 4-hour trend being bearish while the 1-hour trend is bullish. The direct time frame conflict, no coherent directional energy. Condition 2 reinforces 5 consecutive sessions of active dual divergence warnings constitute a persistent divergence cascade. The daily BBWP sits at 95.2, signaling macro volatility resolution is underway, and the weekly carries a bullish divergence from oversold with BBWP compressed at 23.1. These 3 simultaneous fuel integrity failures satisfy the multi-timeframe exhaustion condition. 15-minute prime grade is structurally meaningless inside this configuration. It is known false comfort pattern where cinematic readiness is consumed by TF friction before the measured move develops. So essentially, with the setup that it's calling, it's essentially saying there is technically the 15-minute is trying to call a setup today. However, with the other conditions that are kind of going into this, like the 1-hour mostly being in confliction with the 4-hour, we're looking at a stand down signal because, it's just telling you that the 15-minute might be ready to go, but the rest of the market is conflicting, so it's better to just stay away. That doesn't mean the 15-minute isn't going to fire. It just means that we would rather stay out of the way. So if it does start bouncing around like crazy, we're not caught in the middle of it. Structural landscape, so kind of the 2 triggers that we kind of showed on the chart earlier. Prices sitting inside of the box, the 30-minute box with the POC at 62,744, just above the upper edge of the range. Neither trigger has fired, and price is coiling at the bottom of a compressed overnight structure that is already oscillated near that 1,300, making stop placement at either extreme structural liability until one side breaks cleanly. So we have broke below the breakdown range. Obviously, the data is more set in stone, so it grabs the data from the morning. There are some parts that kind of fluctuate a little bit more, but it stops mostly at the data from the morning because we wanted it to be, grab the data, make the decision, and then kind of show us what you're thinking for the day. And that's how Kabroda kind of works. So some of it, is, like I said, a little out of date, a couple of candles behind, but overall, it's pretty on point, especially with how it's been lately. What would change this? So if the sessions becomes tradable, when the 1-hour or the 4-hour trend flips bullish, or the chop rest cinematic grade resolves to primed with a clean 4-hour and 1-hour alignment. Currently, the 4-hour is bearish, and the harmonic state is hostile ceiling, which is a structural veto. The persistent 5-session divergence cascade must clear before any short side measurement is viable, and the weekly bullish divergence from oversold remains an active whipsaw threat to any breakdown attempt. The maximum wall at 60,025 with the high hit score will structurally cap any short extension to T3 regardless of trigger quality. So essentially, it's great that the heat score is high, but even if we were to try to run down and take that out today, it is a support level, so we will come down and more than likely hit it and kind of stop. Whether or not we continue to break through it or if we bounce there, we're probably going to sit there for a little bit. Maybe we'll come down. I mean, obviously, if you're bouncing, you're probably more than likely just going to hit it and bounce off of it. But if you're going to try to break through it, we'll probably come down. It'll kind of sit there, maybe bounce up a little bit, and then come down and break through it. So it'll be a while, or it just will have a hard time breaking through that. So you might not even get that on your trade. So that's why it's saying T3 is not even a possibility. The other side, so if we wanted to look bullish, the 4-hour trend needs to resolve bullish on the daily close with the dual divergence cleared and cinematic fuel upgrade to primed with coherent TF alignment. The long setup from 63,555 becomes structurally viable with T1 at 64,666 as a single target. The structural path to T3 at 66,464 is clear of all heavy and maximum walls, but no extension beyond T1 is authorized until the divergence cascade is confirmed resolved. The short side faces the maximum wall at 60,025 with a heat score of 29.1 as a hard structural ceiling on any extension. T2 at 60,646 is the maximum viable short target on the structural map, regardless of movement, and the weekly bullish divergence from oversold makes any short side measure move below 61,333 a structural reckless execution. So essentially, you know, we could go, if we do go long, we're looking at more than likely just a T1 64,666. There is a possibility, I guess, of that T3 at 66,464, but more than likely I just want to pull it at T1 if we do end up flipping to the long side. But like I said, you do need that 4 hour to be resolved as bullish, and you'll need the dual divergence to be cleared with the fuel in the 15-minute to be going up to you know, to be ready to go. Essentially pretty unlikely that's going to happen. So more than likely, you know, if you're going to look at anything today, you're probably looking at the short, but the system is calling a stand down. So welcome in, Spirit Maker. Hopefully you heard that. We're looking at a stand down today on the trades there. So we're looking to not really looking to take it up, not really looking to take it down. The 1 hour and 4 hour are conflicting, so we're looking for just kind of a stand down day, just mostly sideways. That's what we're looking at. So yeah, that's kind of our, that's a little recap there. Just 1 hour, 4 hour conflicting. You know, everything is bearish from the weekly all the way down to the 4 hour. Then the 1 hour is saying that we're looking more bullish, and the 15-minute is ready to go. I believe down is what it's calling, but it's ready to go, I guess, either way. It's got the structural, you know, the fuel, I guess, ready to go down. It's not primed, I guess, to the upside, so it's primed to the downside, so it's ready to go downside. But we can't really do anything with that until we get the 1 hour to play with us. So right now we got confliction, so it's better to just kind of back up, you know, take the day off, sit back and watch. I guess you could take a sort of you know, little paper trade to the downside, I guess. But the other thing to note is that the system also is calling that there's no real structural walls within our levels today. So even if you had your stop way out here, the likelihood of it getting hit is pretty high because there's just not a lot of resistance. Well, I guess right now it's all resistance within our levels. And that's actually going to stop it from going up and hitting your stop. So, I mean, should we break down just based off of the 15 technically? But like I said, the 1 hour is conflicting with that, and then the 4 hours conflicting with the 1 hour, and weekly is conflicting with the 1 hour. So overall, you know, better to just stand down, stay out a little bit, just kind of hang out. That's kind of the idea today. So yeah, that was that's kind of our breakdown for the day. That's our daily brief. Like I said, so that's kind of the thing that we're looking to bring out in our publication, something similar to that. If we I can show you guys the basics of the publication. This is kind of what it will. This is kind of what it'll look like right here. So you can see more or less the same thing. You got a nice little title here. VTC structure vetoed, hostile time frame conflict, domain sideline discipline. Kind of tells you everything you need to know, you know. But you read it, you get a little bit more information, kind of the stuff we already just read, just a little bit more uh, written. I would just say written better, I guess. It's just written a little bit more in simple terms, easier to understand, easier to kind of digest, I guess, as you're kind of reading it. It just makes it not so much just a bunch of numbers and different things kind of coming up, but it lets you kind of read it and understand it a little bit better. And obviously this is kind of just a rough draft, so there definitely will be some improvements to this. We're looking at ways we can kind of improve the writing format and kind of improve the just overall kind of article, so it looks a little bit more clean, a little bit more I guess just appealing, and more makes you actually like kind of want to read it and check it out. And we'll change the fonts and stuff like that. So but overall, this kind of the rough draft there, that's kind of what we're thinking about doing. So if you guys were interested in kind of hearing about that, that's what we're looking at. But yeah, looking like a stand down day, so nothing too interesting. Hopefully tomorrow we'll have a little bit more of a move kind of coming in, but overall, a lot of sideways price action. Could be around the 60,000 level for a little bit, especially with everybody pretty excited about bouncing here. And that could cause us to kind of hang around here for a little bit before we drop down, kind of let people jump into their longs, set up and get ready to go, and then it'll just rip down and take them all out. So, and like I said, it could flip long here as well. I'm not going to throw that idea completely out of the window, but overall I would say we are definitely more bearish as of right now. The TA and everything is just kind of set up for more of that bearish look, so we're not super interested in looking at the longs and being worried about taking jumping in at the bottom here at 60,000. If it does bounce, we're only 15-minute traders, so we're more scalpers anyways. So even if we miss the bottom here, even if this was the bottom and we missed it, it wouldn't be a huge deal. We just kind of have to be mindful, I guess, of it, not be I don't know, like we'll take it every day, so it won't really matter. If it flips there, we'll be looking at the longs a little later as the chart actually tells us to take longs. TA starts set up and stuff starts to kind of work together again. But yeah, right now definitely looking short overall on the longer term time frame, but with the 1 hour kind of being against us right now, it's better off to kind of say we're not going to do very much today. Kind of sideways to nothing day, really. But yeah, thank you all for joining. Glad we could have another live stream here on Tuesday. We'll be back here tomorrow for our daily breakdown. On Wednesday, we'll be checking out the market again, seeing what we got. Like I said, hopefully the 1 hour kind of flips by then. Maybe we'll get some trades kind of set up and stuff like that. But who knows? Yeah, thanks for joining though. Thanks for checking in on us. Hopefully that was informational and helpful to y'all. We're here to help y'all out, help y'all understand, help y'all learn. So yeah, if you guys ever have any questions, just go ahead and throw them into the chat. We're happy to help, happy to explain a little bit. Some of the things are a little more behind the scenes. You probably don't need to know about them, but we're always happy to try to answer some questions. So yeah, just let us know, if you need anything. Throw it in the chat, like I said. Waiting for reset for a drop again. Yep. Yeah. Yeah. Hit the like button if you guys liked our content. If you guys are new to the channel and like it, enjoy us, just go ahead and hit that subscribe button so you can catch us again. Hit the bell notification if you're really serious about catching us again. That'll get you the notifications so you know when our videos come out and stuff like that. But other than that, we will catch y'all tomorrow for the live stream. Until then, happy trading to y'all. We'll see you then.